What if that thing actually is a threat? To you? What if Bitcoin is not a get-rich-quick scheme or an opportunity? What if Bitcoin is not a symptom of the increasing speculation of an increasingly corrupted ledger and the symptoms of that? What if Bitcoin is actually the solution and it's doing exactly the opposite of what you would expect the world's lowest risk asset to do? And that's what I would argue. As absurd as that might sound, and perhaps even you disagree with me, but I would argue that Bitcoin's already the lowest risk asset on planet Earth. Because if we assume the future world is coming, and we hope that's coming, the only low risk asset in that world is having a share of the global monetary stock. Mm-hmm. Why would you own a security in a company with cash flows? You have a CEO and scandals and cash flow market. Why would you own planets in a universe where there's a black hole that's expanding infinitely forever? It's like you can try to censor it, you can try to destroy it. China's tried to censor Bitcoin, and every time they censor it, they only make the network stronger. And that's why they've given up on censoring it. No matter how much mass you throw at the black hole, no matter how much attention or negativity you throw at Bitcoin, it just absorbs it and grows greater and greater in a volatile fashion. And so I genuinely believe that Bitcoin's going to absorb all monetary premium of assets and eventually become the global means of storing value for the human race. And this is a good thing, and I believe it's going to save millions of lives. When it comes to your question here, basically the important thing to understand is that Bitcoin is a piece of technology, and it inherently is going to be volatile because it expands at an exponential rate, and all technology is expanding at an exponential rate for all of human history. So volatility is inherently going to be a function, and the only time at which Bitcoin is not going to be volatile is once it's fully adopted. To take the internet, if you had a price for the total value of the internet, it would be nothing but volatile forever. It would have been volatile during the lockdowns of 2020. It would have been volatile in the tech bubble. It would have been volatile this whole time, except, the fact that the network is increasingly volatile to the upside and becoming more valuable. Again, Metcalfe's law, as you bring in more people to the internet, you create more value. We're only at the beginning. There's still so many people that, send checks, don't use the internet, even people that do have quote unquote internet access. There's so much that is not a part of the internet yet that eventually is going to be, and the efficiencies will just continue. And so Bitcoin, as a subset of the information age here, what we're looking at here is a system that's growing 80%, roughly speaking, faster than the internet on a compound annual growth rate. So Bitcoin is growing faster than the internet, and that's one of people's big turnoffs is they think, well, Bitcoin won't matter to me until it's fully adopted. Well, the problem is, like I said, the internet's not fully adopted, and think about how much that's changed your life. By the time Bitcoin reaches 15% adoption, your life's going to be radically different than it is today. Yeah, exactly. These different systems that are on top of each other that I'm referencing, they all reinforce each other. The faster you adopt the energy grid, the faster you can upgrade to all these other things. It's just a reinforcing, and this is nothing new. And if you stop thinking of the world in terms of corrupted political currency units, and you instead begin thinking of the world in terms of fixed, immutable electric energy units within a closed, finite system, what you begin to see is that the relative value of every other system in the world continues to decline. Again, to use the oxygen versus Mona Lisa metaphor, it doesn't matter how valuable oxygen is to your survival. If it's an open system with an infinite supply, its relative price compared to the finite closed system of the Mona Lisa has to go down. The relative value has to go down. And so you asked about diversification. If we look at this here, it pretty much doesn't matter what you own. It doesn't matter if you own stocks or you own Turkish currency, Argentine currency, gold, or real estate. Everything is pretty much going down in relative terms against Bitcoin. Radically oversimplifying. But basically, salt and grain is an advancement in technology that makes the old world seem ancient, to upgrade from hunting and gathering to actually having farms where you can grow grains and, have cows and livestock and everything of that sort. Those are the first kinds of money after the social credit era. And then, of course, technology continues to advance, and eventually we go to gold. And gold, especially towards the beginning of, AD, Rome and everything of that sort, you have gold kind of taking the stage because, while salt and grain is better than social credit because you can actually touch it and you can actually quantify it, in bushels or barrels or whatever on a tablet and actually have a ledger. Technology's progressing, you're writing and everything now. Now, gold's even better than that, because the problem with grain, of course, is that, it expires, and gold doesn't really expire. So gold is an improvement of technology from the old monetary standards. So that's kind of the more ancient world that we think of today. We're talking, much later, Egyptian period, Rome, China and other dynasties and empires. That's the gold era. And then you come to the Dutch and, Middle Ages and that era, and you basically have a debt monetary system. And this is something I think that people don't realize. Just because our lives have changed so much, we think we're in the middle of the information age. It's like, no, we're at the very beginning of it, and we'll touch on that later. But that's the basic idea here, that humanity is a continual exponential curve of technological progress. That's the basis of history. And the world's empires, the world's political movements and regimes, and the world's monetary standards, frankly, are a function of the technological advancement of that time. Everything comes back to the technology. So that's the basic idea with those standards. And those 5 standards are loose, again, but that's the basic idea. Strictly an adoption curve. Here in the West, we're very privileged and spoiled. I'm in the United States, as you are, and probably a lot of people listening to this. We're all able to listen to this, with our own headphones in real time. We have extremely low friction costs, and it's basically free and instantaneous as soon as we want it. And it's a wonderful thing. But the reality is, for about 40% of the world, depending on which sources you cite, there's a significant portion of the world that's yet to use the internet. And so if we were to say that a given technology only has 60% adoption, frankly, I wouldn't say we're in the height of the internet. I would say we're only in the beginning. More or less, a third to half the world is yet to use the internet. And then once they do, these developing nations and regions are going to industrialize. And so we're at the beginning of that. And so all these things coming in the future, artificial intelligence, humanoid robots, self-driving cars, all these other things, I think, can easily be classified in the information age. And really, the information age, in my view, at least, started with the computer in, the 40s. I think you can debate that, though. But one way or another, I believe we're at the very beginning of the information age, just because there's so many people yet to use the internet. And then once they begin using the internet, then that's where all the growth begins. To me, it's akin to saying in, the early 20th century that the industrial era is over, when it's like, okay, no, we just discovered flight and the locomotive is only at, 60, 70% adoption, whatever it is. So that's the basic idea there. The game theory of money is really interesting to me. The first thing to understand is that money converges on one. Why would you trust the second best money when you can just trust the best one? Silver is just an inferior gold. Take real estate. If we consider that a form of money, there's, the best piece of, you don't want the second best piece of real estate, you want the best one. And so it's the same thing with money. Why would you want the peso or the lira when you could just have the US dollar? You're taking, and everything is a risk. You might as well take the one that has a greater network effect and lower risk. And, this is what's often attributed to Metcalfe's law and Gresham's law, which I probably don't have time to get into here. But, all these theories are basically saying the same thing, that money is trust. But basically what it is a system that is closed. And that's why, Saylor, as an example you brought up earlier, he's an engineer. And in my discussion, you're an engineer, and other people I talk to, in my personal experience, engineers understand Bitcoin much faster than financial experts. And I believe that's because engineers are trained to understand the strength and survivability of a given system. And once one realizes that Bitcoin is designed to be an economic energy storage system that doesn't have an energy leak as a function of time, you realize that it's inevitable. And one of the big frustrating things, again, when it comes to volatility, like you said so well earlier, is that people look at Bitcoin and think, oh, it's volatile, blah, 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 blah. It's a bubble, whatever. And then it crashes and think, oh, it's dead. It's like, well, what if Bitcoin is not skyrocketing in value then crashing? What if instead it's the US dollar that's volatile? Think about this dramatic rise in interest rates. What if over the last year, Bitcoin has not collapsed and priced against the US dollar 70%? What if the US dollar has actually rallied against Bitcoin 300%? What if we're not in the middle of a Bitcoin crash. We're in the middle of a dollar's parabolic spike upwards. And so, and both these things can be true at the same time. I know Bitcoin's crashed, obviously. This is already happening. This chart that I've had up here for a minute is the US dollar against Bitcoin in logarithmic terms, again, because you can only think about technology in logarithmic terms. What we see here are clear lower lows and lower highs of the US dollar against Bitcoin for over a decade. This is nothing new. It's not just started. It's only getting faster. And it's not just the US dollar, it's also assets, again, talking about diversification. Political currency units, again, the dollar, have been trending to zero against Bitcoin for over a decade. Rent and housing has been going down. And this is one of the things, again, you'll go back to one of my favorites, Jeff Booth, we think deflation's bad. We think prices going down is bad. When in reality, it's good. It's good when rent goes down. It's good when food prices go down because prosperity is becoming more affordable. For the first time since we have a fixed immutable ledger, we can have the productivity gains of society flow back into the global monetary stock instead of being debased, inflated away in a breaking of physics and corruption of the ledgers. Basically, what we're looking at here is a likely future where as technology makes everything more abundant, as we have an infinite amount of debt, an infinite amount of prosperity, and everything just trends towards infinity, the only finite system in, humankind, its value will trend towards infinity. And, often people say, well, what if you could just make it onto Bitcoin? And it's like, well, that's a whole nother conversation, but you can't. It's a system designed to prevent replications of itself in the same way that the Mona Lisa is a piece of art that's designed to be unique in its design. If you copy the Mona Lisa, you only make a lesser version of the Mona Lisa. In the same way, with Bitcoin, you only make lesser versions. But it's just that mindset change that we don't even think about because we're so used to thinking about that a US dollar equals value when it doesn't, and it never has. Remember, those are the 3 really big important years of monetary history in the 20th century for the United States. And this is a figure of income inequality in the United States. And you can see that pretty much instantly, once we repegged the dollar to gold in the Bretton Woods Agreement in 1944, income inequality dramatically decreased. And likewise, in the early 1970s, after we again depegged, of course, the incentives shifted. There's a greater incentive to predict the market. And of course, who's obsessed in doing that? That's, the higher income earners. And so, of course, a greater flow of capital and value, again, left productivity and went back to managing money. And so, again, this is another chart just emphasizing the same point, not just the top 1%, but also the top 0.5% that you can see in 1971, the downtrend of decreasing income inequality shifted and actually started going back up for the last 50 years. And especially in the last 10 years, this has only gotten worse. And so one way to think about, and we'll come back to this later with Bitcoin instead of gold, is that what we see is that currencies have depreciated against gold continually forever. One of my favorite examples is the British pound, because the British pound is one of the oldest modern fiat currencies in the world. You can go back 850 years or so, and you can see clearly that continually the pound is going down and down and down against gold forever. For almost a millennia now, it's done nothing but go down against gold. Now, this chart here that we're looking at is just the last century, but we have multiple fiat currencies here. Of course, we can see German marks collapsing in the early 1920s. This is one of the major factors that led to World War II. Of course, when you corrupt the money and you destroy the society, you destroy the incentives, everyone becomes much more open to the idea of a strong leader to come in and change everything and make everything quote unquote better. Obviously, I'm referring to Hitler. So, anyway, we'll get to more of that later. But basically what we see is that every fiat currency continues to decrease in value against gold as a function of time. And what that means as fiat currencies decrease in value is that prices of everything goes up. So what we have here when it comes to game theory is we are currently on the edge, like I said earlier, of becoming the ancient world of tomorrow. Even though we're the modern world yesterday, we're the ancient world of tomorrow. And when we look at everything, even before we get to Bitcoin, Bitcoin aside, what we see here is that we have an infinite supply of everything. Real estate is one of the most obvious examples. A couple thousand years ago, a stone, one-story house was a really big deal. And today, the average person can afford a apartment or duplex or a house that's far more prosperous than a billionaire could have 100 years ago. I know perhaps we may not feel like we're as high in the social rankings as them, but truth is they didn't have air conditioning, they didn't have Wi-Fi routers in their houses, they didn't have computers. Your phone in your pocket has a library bigger than Rockefeller's library. So we have an infinite amount of prosperity here. Basically, we're able to create more and more houses. Your stocks doing nothing but keeping pace with the expansion of the ledger that you're denominating those stocks within. Again, when the money is a lie, the true value of your stocks that the stocks are trying to communicate to you, it is a lie. It doesn't make any sense, and you inherently then believe that the stock's going up in value and everything else is keeping the same price, when in reality, it's like, no, the stock's keeping the same value, and technology is forcing the prices of everything else down. And the point here, again, comes back to monetary premium. If you compare the United States stock market in blue here versus the rest of the world, the United States clearly has a monetary premium because, again, if you're going to store monetary energy, why would you choose the second best stock market when you can just choose the United States stock market? And so when it comes to diversification and thinking about this, if I'm going to skip ahead a little bit here, one of the main ideas, and I love this graphic so much, one of my favorite Twitter folks out there, what you see here is that, again, for the first time, we have this ship that with a hole with no open flaws in the system. And so we have a consistent store of value, a consistent measure of global wealth. And if you stop thinking of the world in terms of corrupted political currency units, and you instead begin thinking of the world in terms of fixed, immutable electric energy units within a closed, finite system, what you begin to see is that the relative value of every other system in the world continues to decline. Again, to use the oxygen versus Mona Lisa metaphor, it doesn't matter how valuable oxygen is to your survival. If it's an open system with an infinite supply, its relative price compared to the finite closed system of the Mona Lisa has to go down. The relative value has to go down. And so you asked about diversification. If we look at this here, it pretty much doesn't matter what you own. It doesn't matter if you own stocks or you own Turkish currency, Argentine currency, gold, or real estate. Everything is pretty much going down in relative terms against Bitcoin. So this is a good thing. This being one of those main examples that rent and housing is continuing to go down. And so likewise, Tesla stock has had a great decade, but it's still down against Bitcoin because it's a more open system. Gold's going down and stock indices are going down. It doesn't matter if it's the NASDAQ or Dow or S&P 500, your mutual funds, whatever. And probably one I say in the slide here that they're going to zero. I probably shouldn't have said that. I probably should have said they're trending towards zero. In the same way that oxygen never quite hits zero against Mona Lisa, these things will probably never quite hit zero, but they'll continue to have 80, 90% declines, continually forever. It doesn't matter what you own. Where we are now, and the big scope of where we are now, basically I want to make the point in this show today that Bitcoin's a monetary singularity, and I would argue the monetary singularity. That meaning we're entering the fifth era here. And so fundamentally, what has to be understood, I believe, by the average person is that this is a very rare event, and it makes perfect sense as we leave the industrial era of the 17th, 18th, 19th, 20th centuries, all that era, more or less, in the Industrial Revolution, putting that in a pin, concluding that. Now we're entering the information era, and we're only beginning the information age. And this is something I think that people don't realize. Just because our lives have changed so much, we think we're in the middle of the information age. It's like, no, we're at the very beginning of it. What if this replaces something? And that's the slide I want to get to here, is that what we have here are two lines. The first line being this is a conceptual idea here, but basically you have the Stone Age and the Bronze Age. And of course, which system is more volatile when you compare these two systems? Well, it's the incoming age, it's the Bronze Age. And why is that? It's because it absorbs all the value, all the economic value of the previous system. Again, no energy is created or destroyed. And then it creates new value. And so inherently, it has to be more volatile than the old system. And then if we go from the Bronze Age to the Iron Age, again, thinking in terms of technological eras, you go from that ancient world, the Bronze Age, to the modern era of that time, the Iron Age. And it's more volatile than the previous system. And also it becomes faster because, again, technology is exponential. It gets faster and faster. So this is a topic I've not actually yet discussed in my threads, and I probably will in the future in greater detail. But basically, for what the average person needs to understand, what I believe they understand, is that, like my first thread discusses, human society is defined by the technology of our era. So one of the main points to make my first thread is that we are in an ancient world of tomorrow, today, in the year 2023, and that we actually have less in common with the person 100 years from now than the person 2,000 years ago. Because 100 years from now, technology is going to be so much more advanced that we can even conceive today. If we're optimistic and we assume that everything is going to continue as it is currently continuing, then basically the technology between today and then is going to be incompatible. In the same way that, we're incompatible with the pre-flight horse era of, the 1920s and, the early 20th century, late 19th century. In the same way, that's an ancient world technologically to today. That's us in the future. And so defining that and expanding on that first thread and that idea, it's not just that eras are defined by the technology, they're also defined by the monetary technology of that era and the different eras. And the quality of money of any given era is more or less limited to the advancement of technology of that era. So and that's what we have here, that we have infinite everything, but we have one closed monetary system. And really quick, and then I'd love to hear your thoughts from an engineer's perspective. One of the metaphors I love is that of oxygen. Of all the assets in the world, the most essential one for human survival is oxygen. Water is important. Heating is important. It's very cold outside. I need that to live. Food obviously is important, but oxygen, from a physiological standpoint, is the most essential commodity of the human race. Your brain, on a scientific level, has the greatest and fastest fear response of a lack of oxygen. So, technically speaking, oxygen is the most valuable thing in our lives that we could own, and yet we never pay for it. And the reason we never pay for it is because its supply is infinite. And so, yes, demand is important, but supply, I would argue, is just as important and more important, because if there's an infinite supply of a very valuable thing, its price, in relative terms to everything else, trends down forever. And so the Mona Lisa is the other example I like to use. There's only one Mona Lisa. You don't need it to survive. You're not going to die in 5 minutes or ever if the Mona Lisa were to be destroyed somehow in some horrific accident. But yet the price, the exchange rate, say, between the Mona Lisa and oxygen is trending up forever. If you were to denominate the Mona Lisa in terms of oxygen, its value, relative value, just continues to appreciate. And that's more or less what we have here, that we have all these infinite systems. And eventually it became evident to these geniuses of the past and to the Bitcoiners of today that eventually, if we're going to continue into the information age, we need some sort of decentralized, distributed monetary system that has a fixed supply cap, that's an immutable ledger, and all these other qualities of good money, which we don't have time to get into here. Even though I'm a young person, a lot of young people don't understand Bitcoin yet and this whole idea. And it's really hard, it's really depressing, because I know so many people that are graduating college and their wages just don't keep up. They don't keep up with the cost of living anymore. It's just horrible. I'm sure you've seen that too, as well as everyone listening. But this is one of, if not the main reason why, is that, we have basically sucked away the incentive from society becoming more productive and better technology. And we have instead directed incentive towards financial management and planning and more or less speculating on what the Federal Reserve or banks are going to do with the supply of money.